Good morning, I'm Maiki Oreta and you're watching Business 360. From markets to policy and everything in between, from Manila and beyond, we cut through the noise to help you navigate risk, adapt to change, and lead with clarity. Let's dive right in. Philippine economic growth is on thin ice as a flood control scandal threatens to derail the recovery through next year. This, according to Maybank. The PSE index could reach 7,000 this year as interest rate cuts and regulatory reforms support a market rally. This, according to ICCP. Now, the Philippines is returning to global debt markets and aims to raise at least $1.5 billion after a year-long pause. A breakthrough at Malampaya is raising hopes for energy security as the government awaits results from additional wells by quarter end. Philippine trade is set for a major overhaul as 40 government agencies join a national single window to cut delays. This, according to the FPI. Philippine tourism remains below pre-pandemic levels, with arrivals stalling at around 6 million. The world is heading toward global water bankruptcy as rivers and aquifers are depleted at an alarming rate. This, according to the United Nations. Donald Trump is threatening 200% tariffs on French wine, raising pressure on President Emmanuel Macron. The Philippines wants to accelerate growth, but a familiar problem is now showing up more clearly in the economic data. Corruption has long been a drag on our economy. What's different now is that the cost is becoming more visible in lower growth forecasts, slower public spending, and in weaker confidence. Malaysian Universal Bank, Maybank, says Philippine growth will undershoot government targets through 2027 as the fallout from the questioned flood control project starts to bite. Maybank cuts its GDP forecast to 4.8% in 2025 and to 4.9% in 2026, well below the government's target range of 5.5 to 6.5% this year and 5 to 6% next year. The bank says spending cuts linked to flood control projects, along with broader budget consolidation at the Department of Public Works and Highways, are derailing the government's medium-term growth plans. What had long been a corruption-related drag is now translating into real economic slowdowns. Weaker consumer and investor confidence, slower public spending, and softer output. Growth slowed to around 4% in the third quarter and about 5% as of end September. Maybank says that the economy could still hit the low end of the official targets, but only if private consumption, which accounts for about 43% of GDP, rebounds strongly. Inflation is seen rising to 2.2%, still within the Bangko Sentral ng Pilipinas' target range of between 2 to 4%, leaving room for policy rate cuts toward 4% this 2026. After a volatile year, Philippine equities are finding some support from factors investors once feared. And that shift is changing the risk-reward calculus for local markets. For investors, falling interest rates and cooling inflation mean lower funding costs, higher valuations, and potential re-rating of Philippine assets after a prolonged lag versus the region. The Investment and Capital Corporation of the Philippines says that the PSEI may approach 7,000 in 2026, supported by easing monetary policy, more of that, steady growth somewhat, and regulatory reforms. The benchmark closes at 60.52 on December 29, down 7.3% year-on-year, before rebounding to 64.87 on January 15th, its highest level in 6 months. The ICCP calls the rally a market catch-up versus regional peers, but warns that 2025 corporate earnings could still drive near-term volatility. For 2026, the firm expects economic consolidation, with inflation near 3.2%, growth at 5.5 to 6.5, and another 25 basis point rate cut. Regulatory changes, expanded REIT rules, and potential IPOs are seen to support sentiment, even as short-term market swings persist. The Philippines is back in the global bond market after a year away. A test of investor confidence at a time of heightened volatility. For government financing, this deal matters because it signals whether the Philippines can still borrow at reasonable costs and how much risk premium investors now demand. The government is seeking to raise at least $1.5 billion through a triple tranche U.S. dollar bond sale, its fourth offshore issuance under the Marcos administration. The offering covers 5.5-year, 10-year, and 25-year notes with benchmark targets of at least $500 million per tranche. The Treasury is looking to price the 5.5-year notes at around 70 basis points over U.S. Treasuries, the 10-year at about 100 basis points, and the 25-year near 5.9%. Proceeds will fund general budget requirements. The bonds carry investment-grade ratings from Moody's and S&P and Fitch. Pricing is set for the New York session with settlement on January 27th. Officials point to stable fundamentals, but traders are watching global rate volatility and a record weak peso, both of which could affect demand and final pricing. Just as the Philippines struggles with rising power demand and high electricity costs, a new gas discovery could change the energy math. The Malampaya East-1 well offshore Palawan has struck gas, with initial results showing it could generate 14 billion kilowatt hours a year. That's enough to power over 5.7 million households or 200,000 schools. For the economy, this matters. More local gas means less reliance on imported fuel, lower exposure to global price shocks, and greater stability for our power supply. The Department of Energy says results from two nearby wells, Camagua 3 and Bagong Pag-asa 1, are expected by the end of the quarter, raising the potential for additional domestic energy supply. May 1 is flowing at 60 million cubic feet per day, on par with the original Malampaya wells, and marks the first fully Filipino-led indigenous gas development. The discovery is part of the $893 million Malampaya Phase 4 program led by Prime Energy and comes at a time when energy security has become a top national priority. With the armed forces of the Philippines ready to protect the field, the message is clear. Domestic energy is now a strategic asset. Energy security may have a new boost, and this time it's homegrown. Now, for years, trade has been a bottleneck for Philippine growth, slowed by paperwork, delays, and overlapping approvals. That may finally start to change. The Federation of Philippine Industries says that the National Single Window Integrated Trade Facilitation Platform could cut through that red tape, allowing businesses to file a single digital application for multiple permits and clearances, instead of making rounds to dozens of government offices. What this means for business is simple: lower compliance costs, shorter lead times, and more predictable supply chains. Food, chemical, electronics, and automotive importers stand to benefit first, with faster approvals and fewer disruptions from administrative delays. Once linked to the ASEAN single window, the platform also puts the Philippines on more equal footing with regional peers like Singapore, Malaysia, Thailand, and Vietnam, where trade processes are already largely digital. FPI says that the system complements the Bureau of Internal Revenue's digital transformation roadmap, which aims to make tax administration more predictable, transparent, and less discretionary. Together, these reforms remove a quiet but costly drag on our economy and help our firms move goods faster, price more competitively, and scale with much less friction. But the payoff depends on execution, reliable technology, trained staff, and consistent implementation across the agencies. After a year hammered by typhoons and African swine fever, the Philippine agriculture is showing signs of stabilizing, and that matters more than the headline numbers suggest. Analysts estimate farm output grew by around 2% in 2025, led by poultry and crops, even as livestock and fisheries continued to struggle. For the economy, any turnaround in agriculture has outsized impact on food supply, prices, and household incomes, especially outside metro areas. Poultry has benefited from new market entrants, while palay and corn output declined, and typhoon-damaged fisheries underscored how weather shocks remain a major risk. Still, better weather conditions and farmer resilience helped reverse last year's 2.2% contraction, offering a modest but important lift in an economy where agriculture supports 1 in 4 jobs. Full-year agriculture data will be released on January 28th, a day ahead of the GDP report, providing an early read on whether rural recovery can start contributing more meaningfully to national growth. The Philippines is bringing back millions of tourists, but the recovery is losing steam before reaching pre-pandemic levels. The country welcomed nearly 6 million visitors in 2025, yet that still falls short of the 8.3 million recorded in 2019, raising questions about whether spending more on marketing is actually delivering results. Inbound arrivals reached 5.9 million, just 71% of pre-pandemic levels, despite billions of pesos allocated for branding and promotion. Foreign tourist arrivals slipped 2%, with most of the growth coming from overseas Filipinos and North America, suggesting that core source markets remain fragile. This matters for our economy. Tourism supports jobs, small businesses, and foreign exchange earnings, and a slow recovery limits its ability to drive growth. The Department of Tourism is targeting 6.7 million arrivals in 2026, banking on a 1 billion peso budget for branding, along with e-visas, VAT refunds, and airport upgrades. South Korea remains the top source market despite a 20% drop, a reminder of global travel volatility and how vulnerable arrivals remain to external shocks. Even with big budgets and ambitious plans, analysts say that the real test is execution, whether the DOT can turn marketing spend into sustained arrivals, longer stays, and higher tourism spending overall. With recovery still incomplete, observers note that the department is only halfway through, proving that its strategy and its leadership can actually deliver measurable tourism growth. The Philippines is not known for predictability, and investors are well aware of that, but some are still coming in by sticking to the few areas that have a track record of stability. The Philippine Economic Zone Authority says its long-running Ecozone system, built on clear rules and consistent implementation, is what's keeping investor confidence intact. PEZA Director General Tereso Panga points to a framework that dates back to 1969 under the Export Processing Zone Authority, designed to be rule-based and insulated from political shifts. That model is expected to create 100,000 new jobs this year, mostly in IT and business process management, adding to about 1.8 million indirect jobs already supported by Ecozones. From January to November of 2025, PEZA approved 281 projects worth 207.58 billion pesos, up nearly 3% from last year. Just as important, locators are no longer chasing tax breaks. They're prioritizing basics, infrastructure that works, flood control that holds, and a regulatory system that doesn't shift midstream. The message is clear. Investors are not betting on the entire system, they're betting on pockets that deliver. For now, PEZA remains one of them, even as broader uncertainty continues. We're taking a quick break. Up next, Mamamayang Liberal Party List Representative and Deputy Minority Leader Laila De Lima joins us to talk about the intersection of business risk and governance. Keep it here on Business 360. Welcome back. President Ferdinand Marcos Jr. is facing his first impeachment complaint. The big question now, does it hold water or is it just political noise? The fighting comes as our economy continues to deal with the fallout from the flood control corruption scandal and as the Philippines prepares to host the ASEAN summit in the coming months, at a time when governance and credibility are under sharper scrutiny. Joining us is Mamamayang Liberal Party List Representative Laila De Lima. Good morning, ma'am, and thank you for being here with us.
Good morning, Maiki. Good morning to the viewers of your program.
Okay.
I'm delighted to be here.
Yeah, it's always good to hear from you. Okay, let's start with your position, Congressman De Lima. Are you for, against this impeachment against the president? I mean, of course, you've got to hear all sides, but do you have an official stand on this at this time?
You see, Maiki, as a deputy minority leader, I'm an ex officio member of all the committees, and that means I'll be a member of the Committee on Justice and will be sitting and resolving this impeachment complaint at the committee level. So it will be very difficult for me to already air out or express categorically what I think about the impeachment. Although I had initial thoughts already perusing over the 15-page impeachment complaint with 3 general grounds and 6 specific grounds. I have initial thoughts already on those grounds, but it would be difficult at this point because what would be crucial would be how this will be presented at the committee level. Yeah. You know, how justified, how cogent, how persuasive the arguments will be put forth by the complainant. and also, of course, the evidence. It depends on the supporting evidence. So the key question here, are these impeachable offenses?
Yeah.
That's the first, that should be the first. Of course, there's this preliminary act or action on the part of the Justice Committee to determine first whether it's sufficient in form. If it is, then is it sufficient in substance?
Yeah.
Because a complaint to be worthy of consideration must be both sufficient in form and in substance.
Yeah, absolutely. And we just want to get an understanding from your point of view. Business leaders are trying to assess the threat level of this. An impeachment is more political than it is legal. That's always been the case. And this is going to be a real test on the grip our president has on Congress at this junction. It comes at an interesting time. On February 6th, we're going to hear the impeachment complaint is said to be filed against the vice president. What do you think about this political noise and where it's headed? What are your thoughts on this, Congressman De Lima?
Okay, of course you're correct that it is both legal and political. But I should say that is actually, in reality, it's more political than legal. Legal, of course, because it's a matter of following the procedure, whether the procedure laid down with the Constitution and the rules of the House and impeachment proceedings are followed. But of course, there is still that issue about what would be the final decision of the Supreme Court. We all know there are still pending motions for reconsideration in the impeachment complaint filed against VP Sara, but was declared unconstitutional by the Supreme Court. But there are pending motions for reconsideration. So we're waiting for that. Mm-hmm. Now, why did I say that it is more political? Because in the final analysis, it really depends on what was the grip, what is the hold of the president over Congress. Even if they can always say that the president, the executive as a separate branch of government cannot interfere with the work of Congress as a co-equal branch of government. But in reality, the president, of course, has a lot to lose if this thing prospers.
Yeah,
all the
absolutely.
way to the Senate.
Yeah.
So it's a test, basically, on the leadership of the president.
Yeah, the administration, of course, they have high hopes that this is going to be dismissed at the committee level. While they do have majority, the question is, will that majority right now crumble under the weight of, all the pressures that are coming up? And Congress is duty-bound to act on this, as they will be duty-bound to act on the impeachment once that is filed of the vice president. What are your thoughts on these dual impeachment proceedings and about this derailing the attention of Congress from more important matters of productivity?
Okay, one thing is sure, is the imperative duty, constitutional duty of Congress to act on any and all impeachment complaints that is properly and legally forwarded or filed with it. So with two impeachment complaints, because we all know that there will be also a new impeachment complaint to be filed against VP Sara. Now, of course, there's always the argument that this will be a distraction. This will derail more important, more urgent pieces of legislation. But a constitutional duty outweighs any such view. It's still the duty of Congress to act on these impeachment complaints one way or the other. It cannot be an excuse that we will be distracted. Our attention in governance matters, in legislative matters, will be discarded. Mm-hmm. The public will be looking at how the process will proceed or will go as to these two impeachment complaints against the top or the highest officials of the land.
Yeah, and of course, it's clear to see who benefits from this complaint, from pushing this complaint forward. But I want to hear it from you, ma'am, with the timing of everything, with the February 6th impeachment against the vice president. What do you think about the timing of this complaint and what it says about who's going to benefit from it?
Well, it's clearly that the side of the Dutertes would benefit from this. And look at the grounds. For example, the first ground itself is about the arrest of the former president that allegedly violated the president violated the Constitution or betrayed public trust for allowing the arrest and surrender of the former president, although we all know that there is a warrant of arrest, or there was a warrant of arrest issued by the ICC. So, and then this matter about the creation of the ICI as allegedly just a ploy to shield allies from accountability. But of course, that is a very general ground. And then that is a matter of, a state of mind, the exact motivation of the president in creating the ICI. And nauna, final itong impeachment against the president. Because, well, as we know, hindi pa naman kasi pwedeng i-file at this point the one against VP Sara because of the one-year bar rule. So technically, legally, indeed, any complaint for impeachment can be filed anytime at this point against anyone else except VP Sara. But it's easy to see through the motivations here to really, to further burden the president, to further burden this administration with more problems when there are many problems already besetting this administration, which we can even say that this administration, the president is on a survival mode at this point. And then aggravated by this thing, by this impeachment complaint, the first ever filed against President Marcos Jr.
And as you said, the president is on survival mode. Congressman De Lima, who controls whether this stalls or moves forward at the House? That would be the
House
Speaker.
Leadership.
Yeah, House leadership.
The
So
House
that's the Speaker,
leadership.
the Deputy Speaker.
The Deputy, the Speaker, and the Deputy Speakers, as well as the Majority Leader. It's very clear, especially so that this is very important. This is very crucial. It can, no matter what denial can be put forth by the Speaker, the House Leader would be controlling the whole thing, including the Majority Leader.
As this plays out, ma'am, what should the public be watching out for specifically?
What the people should be monitoring is how the process will go on, how the process will be consistent exactly or in accord with the rules of impeachment under both the Constitution and the rules of impeachment of House of Representatives. Because you see, this is a very crucial duty, crucial matter. And what the public would like to see is that all the rules are applied fair and square. It cannot be exploited for any selfish ends. That it should really be all about accountability. That is the key point there, because no one is supposed to be beyond or above accountability, and that is why we have such a process called impeachment, because that's the only way at this point to hold any erring high officials of the land accountable.
Yeah. Speaking of accountability, Congressman De Lima, former Senator Bong Revilla recently surrendered following the Sandigan Bayan arrest warrant tied to the flood control scandal. In the middle of the impeachment noise, what does this development say about accountability?
Well, we can see that it's moving. Accountability is moving, but it cannot end with arrests, and it cannot end with just one big fish being arrested. People again are watching this. How many more big fish or big fishes among the major players in this whole corruption scandal will be put to task, will be arrested, and will face prosecution? It cannot end with one, just one.
Yeah, that's the thing, getting the main culprits. As everything has played out, Congressman De Lima, how difficult would you say, does it appear to be, to get the main culprits behind this flood control corruption mess?
Well, it may or may not be difficult. it is difficult because we're dealing with powerful figures and, with enough resources, with much resources actually to hire good lawyers, the best lawyers in town who would know how to manipulate the process, the rules of court with dilatory tactics. So on the practical aspect, that's the downside, that we are dealing with powerful and much resourced political figures when we talk about big fish. So it is difficult. But it may not be difficult if we have really a determined ombudsman and determined task or determined team, a focused, dedicated team to really go after these big fishes. And I'd like to say at this point that I'm still hoping that the president and others would be open to having our law, our bill, the ICAIC bill, enacted into law. Because we feel that even the Office of the Ombudsman would be needing some help, would need a complement, would need supplement, a supplement force to go after all of those involved in this corruption scandal. That's why we're pushing for that independent commission against infrastructure corruption.
That's right. And as we push forward, to be more proactive about all of this, to kind of stop it where it starts, you're challenging the 150 billion plus unprogrammed appropriations in the 2026 national budget. Why do you think that this is constitutional?
It is unconstitutional because it's very clear in the Constitution. It is unconstitutional because the Constitution actually requires that for any budget, it has to be supported, or it has to be with the budget of expenditures and the sources of financing. But when you talk about unprogrammed appropriations, there is no funding yet. So what kind of an appropriation is it? And it abdicates the congressional power of the purse. Because at the level of Congress, as I said, it's the one who really appropriates. It enacts the budget. And when it enacts the budget, when it passes the budget, all of those should be there already. The expenditures as well as the sources of financing. If you just stop at the budget of expenditures without sources of financing, you are actually surrendering your power of the purse on the part of the legislature, and leave it to the discretion now of the implementing agencies, the executive, the president, to really deal with the project later on when there's excess revenues from when it comes. So it's unconstitutional. It has been articulated quite plainly in the separate opinion of Associate Justice Ramon Paul Hernando.
Okay. That goes to why it's unconstitutional. If the Supreme Court rules against the unprogrammed funds, does that meaningfully reduce our corruption risks, Congressman De Lima?
It will. Because you see, unprogrammed appropriations, what was happening before is that certain programmed appropriations are defunded at the level of either NEP or at the level of Congress in the GAB or in the GA itself, and gets transferred to the unprogrammed appropriations. Kaya nga sinasabing parkingan daw yan, so that it's easy to manipulate the funds. And we saw that. It turned out that some of those in the unprogrammed appropriations were actually used for this very questionable, highly anomalous flood control projects. So it would have a meaningful and substantive effect in terms of fighting or combating corruption.
And still along the lines of combating corruption, you filed a bill called the Anti-Illicit Enrichment Bill. This will make things easier to prosecute. How will this make the job of the Ombudsman and the entire team combating this easier?
Okay, we all know that it's difficult to prosecute or to build a case of plunder under the anti-plunder law. Because you have to still prove, let's say, that certain funds were misused and that the subject of the prosecution received kickbacks, received commissions, etc. So there's a series or combination of overt acts that you need to prove. So for the plunder case to prosper. Now this anti-illicit enrichment law bill that I filed, this would simplify the whole process, but with the same effect or similar effect as plunder. Why simplified? Because all you have to do is prove that the assets of the subject of the case are disproportionate to the sources of income of the public official concerned. No, it does not jibe, for example, with what is stated or reflected in the SALN. So if all you have to do is prove that there are such assets that cannot be justified by the legitimate sources of income of the subject official. So it's easy. Pakita mo lang na meron siyang mga kondo, for example, meron siyang mga yate, and then marami siyang mga magagarang vehicles.
Yeah.
And yet, his SALN does not justify that. So you can prosecute.
Yeah.
But the effect is still the same as plunder, because if the amount involved is also more than 50 million, then it's also life imprisonment, just like in plunder.
Yeah.
So it's easy.
Okay, ma'am, moving forward, let's talk about another bill, House Bill 6771. This is the anti-political dynasty law. President Marcos is urging Congress to fast-track this bill. It's said that he's going to be speaking about this today. Before we get to your stand on this bill, Congressman De Lima, do you think that the title itself is misleading? I mean, why call it an anti-dynasty bill when it allows multiple family positions across different levels of government, from national, provincial, city, and even barangay?
Exactly. It cannot. It really cannot. No matter how you look at it, you look at the bill, it cannot be categorized as an anti-political dynasty bill. It's more of pro-dynasty, political dynasty bill, because it legitimizes and institutionalizes the political dynasty that we're having. There are many political dynasties, and it's supposed to be the root cause. We consider that as the root cause also of corruption, of misgovernance. And the way it is crafted, they have these different levels of the ranking of the public officials, one national, and then one in Congress, one in the province, one in the cities or municipalities. So there would still be a political dynasty. What are we talking about here? Mm-hmm. It's not.
Yeah.
It favors, as I said, it institutionalizes the system of political patronage through the continued prevalence of political dynasties. So it's not at all an anti-political dynasty bill.
It's not at all anti-political dynasty. Okay, and this matters to the business community because it's about the concentration of power within a politically inclined family. In this case, just one, and then several of them. I want to ask you, ma'am, do you think that this bill is going to be passed within the term of this administration? About 2.5 more years left.
We have actually no choice. This administration has no choice but to see through the enactment of this bill. Number one, because it's announced as a priority bill from the president himself. Secondly, the public clamor is indeed for such kind of a law to be passed. Get rid of the anti-political dynasties once and for all. So it cannot afford. So it must really, exert earnest and best efforts to have this bill enacted into law before 2028. Otherwise, it will cost, again, this administration much political capital.
Yeah. Should they change the name just to make it more straightforward? Can they even?
Well, the bill, it has to be changed. It has to be modified. It may be palatable or it may be acceptable to the dynastic families in Congress.
Yeah.
But not to the general public.
Yeah,
Certainly, the general public is not expecting that kind of an anti-political dynasty bill.
Yeah, it's so strange. I mean, we put people into office, and then, there's so much work that goes into trying to keep them honest and trying to keep it clean and corruption-free. Lastly, ma'am, what do you think this says about where we are on a national level?
Okay. As I mentioned earlier, this administration is now on a survival mode. And there's much erosion of public trust on how things are being done now and how things are being seen now, because there's still unresolved cases of corruption, the unresolved plundering of public funds, and in dealing also with issues, sensitive issues of governance. Now, it is important for this administration to be true to its promises for political and governance reforms. And that should be brought about by the enactment of those crucial bills. Aside from the anti-political dynasty bill, the IC bill also, it has to be passed. Because it cannot really stop with the ICI and then turning over everything to the Office of the Ombudsman when there's a lot to really uncover about the flood corruption and infrastructure corruption scandal. And then the Freedom of Information law has to be passed also. The cadena, the citizens' access and disclosure of expenditures when it comes to public funds, all projects and programs now being visible and being seen under such a significant transparency mode. So these are examples. Although the political party system and electoral reforms bills have to be passed.
So much work to be done. Deputy Minority Leader, Representative Laila De Lima, maraming salamat.
Maraming salamat din. Have a good day.
Now we're going to take a quick break, more business news and the context behind it when we return. This is Business 360. Welcome back. As extreme weather and power disruptions become more frequent, energy security is moving up the ASEAN agenda, and the Philippines is pushing to shape that discussion. Officials from the Association of Southeast Asian Nations, or ASEAN, and the Manila-based Asian Development Bank have agreed to pinpoint priority areas under the ASEAN Plan of Action for Energy Cooperation. The Department of Energy says members also agreed to formally integrate energy resilience across ASEAN energy subsector networks ahead of a dedicated energy resilience roundtable set for June of 2026. Key takeaways from these talks will be elevated to both the senior officials meeting on energy and the ASEAN ministers on energy meeting, where regional policy direction will be set. In a statement, the DOE says that the agreement builds on discussions from the inaugural Energy Resilience Information Session held during the ASEAN Special Senior Officials Meeting on Energy in Bohol. Energy Undersecretary and Philippine Senior Official on Energy Leader Felix William Fuentebella says energy resilience is no longer just a policy goal, but an operational necessity. He says early engagement with ASEAN partners is key to aligning policies and investments that can keep energy systems reliable and flexible. This matters for us as climate shock, supply disruptions, and surging demand put pressure on power grids. The goal, fewer outages, more stable electricity prices, and continuity of essential services across the region. In other news, an insider buy at the country's largest bank is a signal markets pay attention to. BDO Union Bank Executive Vice President Ed Francisco has increased his stake in the C-led bank, buying 15.4 million pesos worth of shares. A regulatory disclosure shows Francisco acquired 108,044,000 shares on January 15 at 142 pesos apiece under the bank's employee stock option plan, bringing his total holdings to 1.36 million shares. The employee stock option plan is designed to retain senior talent and align management interests with shareholder performance. Francisco also heads BDO Capital and Investment Corporation, advising some of the country's largest capital market transactions as BDO continues to dominate the domestic banking sector. For investors, the takeaway is simple. A senior executive is putting more money into the bank he helps run, even as markets remain volatile. In other news, Japanese visa appointments become harder to secure, Malacanang is steering Filipinos back to local travel. The message is practical. When overseas plans hit bottlenecks, domestic tourism can pick up the slack. Palace Press Officer Claire Castro says she is coordinating with the Department of Tourism and the Department of Foreign Affairs following concerns raised by tourism stakeholders. Castro says Filipinos waiting for Japan visas can consider traveling locally, a move that could support tourism workers and help travel agencies keep bookings flowing. But there is a catch. Senator Erwin Tulfo points out that high domestic airfare those costs are making some local destinations more expensive than foreign trips, undercutting the push to keep tourism spending at home. Now, as the government looks for ways to contain prices, economists are warning that some tools may actually backfire. HSBC economist Aris Dacanay says price freezes, including for staples like rice, are difficult to enforce and can create distortions across the supply chain. On Business Brief, Dacanay warned that price caps can squeeze farmers' income, reducing incentives to produce more and potentially worsening supply over time.
We learned 2 years ago when we decided to put a price freeze on rice. But it wasn't really that effective in curbing the surge in rice prices, mainly because it's very hard to track. It's very hard to implement a price freeze. If you're a farmer of rice and you were told that the government would put a cap on the products that you sell, it's gonna hit hard on your income. So you tend to find ways to be able to sell at a higher price to make sure your income is well protected. So I have to say it's hard to implement. It comes at a cost, and it comes at a cost for the incomes of rice farmers.
Dacanay also points to a broader confidence issue. He says uncertainty from corruption probes and budget cuts is causing Filipino households to save more and spend less as concerns grow over future income security.
10% of our labor force is in construction. So with budget cuts seeing in DPWH and DOTR, when confidence in public infrastructure and private infrastructure is down, if you're 1/10, if you're part of that 1/10 of the labor force, you're kind of like uncertain of whether you'll have maybe perhaps a lower income moving forward, whether you'll be laid off. There's a lot of uncertainty towards your future in the labor market as a construction worker. So when your job is a bit more uncertain, I wouldn't say there will be a loss of jobs, but I'm sure there are concerns of uncertainty. You tend to save more because you don't know what's ahead in the future.
On the currency, Dacanay notes that a weaker peso can provide short-term support by boosting remittances and encouraging local spending. But he also flags a competitiveness risk. Dacanay warns that if the peso does not adjust properly, the Philippine BPO sector could lose market share to India, putting future job creation and growth at risk.
Let's compare the Philippines and our number one competitor in the BPO sector, India. India's currency has depreciated by around 9%, while for the Philippine peso, year-to-date, since 2023, it was around 5%. So in currency alone, Indian services is now 4 percentage points cheaper than the Philippines, 4% cheaper than the Philippines. But look at the impact of it when it comes to growth. The BPO sector in India is already growing by around 15 to 20%, while for the Philippines, it's only growing between 2 to 8%. The Philippines is losing market share to India. So if we're not open-minded to a weaker peso, I would have to say our BPO sector will lose market share, and that will be at the cost of future jobs.
A dispute is emerging over how sensitive government records were obtained and used in Congress. Former DPWH Secretary Manny Bonoan is questioning the motive of Congressman Leandro Leviste in obtaining the so-called Cabral files, documents now being cited in congressional probes. Bonoan says that the files were obtained through informal channels, not through a formal legislative request, raising questions about their provenance, authority, and legal status. The vista pushes back, saying that the documents were secured to support investigative oversight by the Blue Ribbon and Public Accounts Committees.
With all due respect, si Congressman is a member of the House of Representatives. Would it have been better actually if the House of Representatives authorized actually the good congressman to officially request for this kind of information or data from the executive branch? So that everything would have been not official. You see, we are talking of things that have not been made official actually at all, you know? If there were conversations, authorization from the Secretary, Secretary Dizon and Yusek Cabral, these are informal arrangements to him, and I don't know what would have been the motive actually behind actually getting all this information from the Department of Public Works and Highways, which is a different agency to the legislative branch.
The contents of the files matter, but they also matter how they were obtained. For businesses and investors, rules around access to state records signal how oversight is conducted, how risks are managed, and how credible any findings will be. In other news, product safety comes under sharper scrutiny, especially when infants and young children are involved. The Food and Drug Administration warns manufacturers that the absence of formal safety limits does not shield them from accountability, particularly for sensitive products like infant formula. The warning follows Nestlé Philippines' voluntary recall of certain infant formula batches due to a possible quality issue with a particular ingredient. The FDA says it has received reports of health concerns, including vomiting, diarrhea, and abdominal pain, prompting regulatory intervention, even without a definitive causal link. For consumers, this is about safety and transparency. For manufacturers, it's a clear warning on risk, regulatory, legal, and reputational. Now, the agency says it has started nationwide inspections to ensure affected products are removed from the market, and we will take full regulatory and legal action if negligence is established. Now, up next, global markets, what's moving and why. This is Business 360. Quezon City is being named the richest local government unit in the country, with total assets of 489.95 billion pesos as of end 2024. The figure comes from the latest annual financial report of the Commission on Audit. Quezon City has held the richest LGU title since 2020, underpinned by consistent asset management. Makati ranks second with total assets of 246.10 billion pesos after last holding the top spot in 2019. Only Quezon City and Makati crossed the 100 billion peso asset mark. Now let's check on how Asian markets are doing this morning. Right now, the Nikkei 225 is trading to the downside, down by 0.6%. Hong Kong's Hang Seng Index flat with a negative bias, actually very flat, down by less than a 0.1%. Shanghai's Composite is trading to the upside, up by 0.4%, and Singapore's Straits Times Index going the other way, down by 0.6%. Taking a look at our market as of 10:52 this morning, the main gauge is trading to the downside, down by 0.2% to 63.43. The broader all shares index is in the red as well, down by 0.2% to 35.98. Now, the financials and the mining and oil counters are the only sectors, limiting the market's decline right now. Volume is thin at 289 million shares, valued at just under 2 billion pesos. Market breadth, however, is bullish. We've got 82 advancers against 76 decliners, while 50 stocks are unchanged. Taking a look at the currency front, the peso opened at 59.39 against the greenback, up from its previous close of 59.46. Now, global markets took a hit overnight as trade war risks returned to the foreground. Stocks on Wall Street and in Europe fell sharply Tuesday after President Trump threatened to restart a trade war with Europe, reviving fears of tariffs, slower growth, and higher costs. All three U.S. equity benchmarks posted their worst single-day losses since October 10th. Both the S&P 500 and the Nasdaq Composite broke below their 50-day moving averages, a technical signal that momentum is weakening and that volatility could persist. Markets in Europe followed. The UK's FTSE 100 saw its sharpest single-day drop in nearly 2 weeks, while France's CAC 40 slid 0.6% to a one-month low. For investors, the message is clear. Geopolitics is back in the driver's seat, and markets are on edge over what's to come next. The world is running out of water, and a new warning from the UN Water Institute says the problem is far more severe than previously understood. The report says that the global water system is entering what it calls global water bankruptcy, with rivers, lakes, and aquifers being depleted faster than they can be replenished. According to the UN Water Institute, terms like water stress or water crisis no longer describe the scale of the actual damage. Long-term overuse, pollution, and climate pressures have pushed many water systems beyond recovery. The UN Water Institute warns that governments must be honest about the true state of water resources and act quickly to prevent irreversible damage to aquifers, wetlands, and glaciers. The report calls for a fundamental reset in water policy, warning that when water systems fail, the first impacts are felt in food production, power generation, and urban supply, driving higher costs, disruptions, and slower economic growth. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel.